right, you guys better be ready. We have a jam-packed week coming up for the stock market, and we're going to break down every stock that you need to watch for this week. We have 10 to cover in this video, but first, guys, hit the like button. Do not forget to subscribe and get your 30 stocks from Moomoo. Open up your account, deposit at least $100, you get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, get on it. Use that link down below or go to stocksurfest.com/Moomoo. And now, cheers, guys. Take a sip of your coffee. You're gonna need it, and let's dive into it. So we have 10 stocks to break down, which, oh, by the way, all of them are reporting earnings this week. So not only are we going to break down the charts here, but we're also going to break down earnings estimates, revenue estimates, what I'm looking to do here. So let's just dive into it, man. And you know, at this point, Friday was not the best day for stocks. It was rough out there. The VIX was up, I think, 15-20% at one point. The Russell went down 3%, NASDAQ 100 down 2.1%, S&P and the Dow each went down 1.7%. So, yeah, it was not the best day at all. That brought down a lot of stocks, including a lot of them that we're going to talk about in this video. A lot of the stocks we're going to break down got hit on Friday, but maybe this sets them up for a rebound after they report earnings. Maybe or maybe not. So let's dive into it, guys. The first one that I want to get into is Salesforce, ticker symbol CRM. This is definitely the biggest company outside of NVIDIA. And by the way, guys, we're not going to cover NVIDIA in this video. I'm going to do a sole video on them after this one. So make sure you guys keep an eye out for that. Stay tuned. We're going to break that one down in a whole separate video, but these are the main companies outside of NVIDIA. And I would say CRM is definitely the most important one, at least for me, in my eyes, this week, other than NVIDIA. And they're reporting earnings the same day as NVIDIA on Wednesday, the 26th. And CRM, guys, has been getting hit since the last earnings report. I'm sure you guys remember the company reported earnings back in December. The stock popped, I think, 20%, was it? 15%? Yeah, it was a big move there. And since that point, we've essentially slowly given back, we slowly gave back all those gains, right? So we saw a 15% pop, right? And over the last 3 months, essentially, we've slowly downtrended right back to where we were right before that last earnings report, right? Funny how that works. So this is actually setting us up for a potential pop again if the company reports strong numbers, surprises on guidance even. This could be setting us up for a big move here. And at this point, guys, let's be honest, we're very oversold. We're at the bottom of this channel. You guys can see on this 4-hour time frame. And I would say we're probably down almost 20% now from all-time highs. About 18-19%. So we're almost in a bear market. Very oversold, bottom of this channel. These earnings would have to be very bad, or not even very bad, but just bad in general for this stock to go even lower, in my opinion, right? So CRM, they're expecting earnings per share of $2.61 versus $2.29 from last year on revenue of $10.04 billion versus, let's see, $9.29 billion from last year. That would be up 8% year over year. Not nearly as much growth as they once saw, but still 8%, not too bad. And again, if guidance is good, guys, if they double beat by a wide margin, that might be all it takes to push CRM higher, considering, again, how oversold we are. We're at the bottom of the channel right now. So keep your eyes on CRM. I'm going to set my alert at, might as well put it at $315 per share. And who knows, man, we might start gaining momentum into Wednesday, as we do obviously have a couple days of trading before CRM reports earnings. Now, number 2, Lowe's, ticker symbol LOW. They're this week as well, and they're on Tuesday. They're typically on a Tuesday, right? No, they're on Wednesday in the morning. So Wednesday in the morning, the 26th, we're getting Lowe's, and this stock is also pretty beaten up, not in the best shape. We're down about, 15 to 17% from the recent 287 high from back in October. We have a death cross here. We're also just recently now taking out the lows from December, early January as well. You guys can see that was at 245, right? You guys can see this triangle, descending triangle at that, as of it looks like Friday, is playing out. So that's not ideal here for the bulls. This triangle's playing out. We're actually now at a multi-month low as of Friday. Not the best sign in the short term, but if earnings come in good, guys, solid, who knows? It could be setting us up for a rebound here, but I don't know. I'm not too confident based on the charts, at least as of now. Again, this triangle is playing out. The bears are gaining an edge here. So Lowe's, they're expecting earnings per share of $1.84 versus $1.77 from last year. Not bad. On revenue of $18.29 billion versus $18.6 from last year. That would be down 1.7% year over year. So Lowe's, guys, yeah, declining revenues, not ideal for the company. Their competitor, Home Depot, we'll talk about here in a second, they're looking a lot better. Let's just actually go to Home Depot now. I'm not loving the way Lowe's is setting up, but Home Depot, honestly, in terms of their estimates, not too bad. Although we do have a head and shoulders on Home Depot. The chart doesn't look that great either here, but when you look at these estimates, they're a lot better than Lowe's. Let's just say that, a lot better than Lowe's, man. EPS estimate for Home Depot is $3.04 versus $2.82 from last year. On revenue, get this, guys, $39.07 billion versus $0.79 billion. So Home Depot's projected to grow by 12.3% year over year, revenue-wise, top line, which is really good. Again, that's compared to the loss of the decline of 1.7% year over year for Lowe's. So not only is Home Depot growing a lot more than Lowe's, but they're literally doing double the amount of revenue Lowe's is, right? So Home Depot is about to do $40 billion. Lowe's hasn't even cracked $20 billion yet. Or is not going to crack $20 billion for the quarter they're about to report for the top line. So obviously Home Depot gets more business. They're growing faster. And I've always been a bigger fan of Home Depot personally. That's just my experience. I literally never shop at Lowe's. I'm just one person, though. I mean, obviously there's people out there that go to one or the other or over the other, or there's some that go to both, right? I have nothing against Lowe's, but there's just more Home Depots around where I'm at. They're closer to me, so I'm like, all right, let's just go to Home Depot. I've always gone to Home Depot, and that's just me. What do you guys do? Let me know in the comments. But in terms of the chart, yeah, Home Depot, we got a head and shoulders. Not ideal, although you can argue that pretty much played out already, as we are still maintaining higher lows here, you guys can see, and we're making lower highs. So if you throw that head and shoulders out the window, what we have here is a wedge, and we're more oversold, pretty beaten up, honestly, in the short term, guys. So if they crush numbers, report good guidance, earnings are on Tuesday, right? Yeah, Tuesday in the morning. Home Depot, don't be surprised if we get a rebound here. We're pretty much at a multi-month support right now at about 380, 385. In my eyes, with it being already oversold, it's going to take a pretty bad report to get us under 385 and down more. Honestly, it's going to take a pretty bad report. So Domino's Pizza is number 4 here, guys. DPZ is the ticker, which, by the way, Buffett just bought Domino's Pizza, I believe. We covered that recently. I don't know if he already owned it. I forget. I think it's a new position, if I'm not mistaken. And he bought a lot of Domino's pizza. Well, not in, relative to his portfolio, I guess, but I'm pretty sure if I remember correctly, he increased his position. I forget if he owned it already or not. Either way, he bought a bunch of shares, and that's a good sign if Buffett's buying it. I'm not going to just go buy it based on that, but if I was already in Domino's, I'd be pumped if Buffett is buying it. So this is definitely, it kind of looks like it's putting in a bottom. I'm not going to lie, on this 4-hour chart. We've held $400 for months, low 400s. Now we're actually pushing the mid-high 400s. We have a golden cross. We're pushing above the 180 SMA here for the first time in months on the 4-hour chart, which is great. So DPZ, Domino's Pizza, they're reporting earnings Thursday. Actually, wait, no, they're tomorrow, guys. Holy smokes, they're Monday morning. So literally tomorrow morning, we're getting Domino's Pizza. They're reporting, or expected to report, earnings per share of $4.90 versus $4.48 from last year on revenue of $1.47 billion versus $1.4 billion from last year, up 5% year over year. Not bad, but obviously not the growth that we've once seen. But I guess when you compare it here, when you compare it to Papa John's, you're gonna be happy with what you see here, guys. So I like the way we're slowly reversing. We have a golden cross. Buffett's buying. That's always a good sign. Let's see now how numbers come out tomorrow and how the stock reacts. Overall, I'm liking the direction DPZ's going just based on the charts here, guys. And Papa John's also went crazy a couple of days ago. Wait a second. Why did the stock break out from 38 all the way to 55? Did I miss something here on Papa John's? Oh, wait. Did they declared fourth quarter dividend? Keeps quarterly dividend at 46 cents a share. Was that at risk of being cut or something? Why did the stock react so? Actually, no, that was before that. Wait a second. Oh, wow. Papa John's could go private. Okay. Earth Capital Management weighs $1.4 billion. Take private bid for Papa John's. Oh, I didn't know that. Okay. I missed that news. But I guess, okay, maybe they go private. We'll see. The stock went up like crazy after that. Rightfully so. And at this point, man, I don't know. I don't know about Papa John's. Year over year, top line is projected to go down 9%. That's not the best sign. $519 million is what their revenue estimate is on average versus $571 from last year. That's a big decline, guys, 9-10%. And EPS is shrinking big time as well. 50 cents is what their estimate is, excuse me, guys, versus 91 cents from last year. So no doubt, at least this quarter compared to last year, Papa John's is struggling, man. And is that a reason why they're going private potentially? The business has been struggling from what I've seen, man. Last couple of years we're downtrending. The stock really hasn't done anything since about a decade. The stock's at the same price it was at. This is nuts to say, but 10 years ago, from 10 years ago, man, this is like when I got out of freaking high school, 2013 time period, 12 years ago. This is insane. So yeah, clearly there's something going on with Papa John's here. Clearly something going on. They're not executing. And when that happens, man, they could go, sometimes it's better to just go private, and that's what they're probably going to do. I have a feeling. There's a bid already. I'll maybe dive deeper into that, but yeah, they might go private. And Cava is another one. We're just running through these food chains here, guys. Cava is another one, which these days, if I had to pick out of Cava, Papa John's, and Domino's, I'm going Cava all day, man. Some good old, fast casual Mediterranean style food. I'm Greek, so a lot of the stuff there hits nice for me. We got the tzatziki, we got, the lamb. I freaking love lamb. What else? the different hummuses. They got this crazy feta dip, which is really good, you know. But yeah, I'm definitely going Kava these days. But if you ask me, 10 years ago when I was in college, hey, I would have been like, yeah, give me that Domino's, man. That $5.99 deal. You get like a medium pizza. You get the cinnamon sticks or whatever on the side. You get another like cheesy bread. Yeah, me and my buddies would do that many nights of the week. But yeah, if I ate like that now, I'd be 275 pounds, guys. We don't want to do that. So Kava's the way to go. Kava's reporting earnings on Tuesday. Yeah, Tuesday after the bell, the 25th. Kava's EPS estimate is 6 cents versus 3 cents from last year on revenue of $223 million versus $177 million from last year, up 26% year over year, guys. Pretty good growth for Kava, and the stock price finally has taken a big drop. It's about dang time. It was up way too much. Now we're down 37% from highs, nicely in a bear market, which this stock, it's a growth stock. It could easily be bought up if guidance is raised, if they beat EPS and revenue, but especially if guidance is raised. I don't think it's going to go much under $100, guys. We'll see. I could be wrong. Time will tell. And wait. Before we get into this next stock, I was about to just get into it, guys. Make sure to join my email list. I'm not sure if you guys have done that yet, but it's free, and I send out my top stocks weekly right to your inbox. Guys, it's linked down below. Put your first name and your email address, and boom, you're locked in there. Again, it's free. Did I mention that? Yeah, it's free. Get in there, guys. So Hims and Hers. You guys know Hims. This stock is very popular amongst the retail community. I haven't made many videos ever really on this stock, but here we are. They're reporting earnings this week, I think on Tuesday. Actually, no, tomorrow. Tomorrow after the bell, Monday. So Hims, guys, this thing has been volatile. It went down 25% on Friday, which is nuts. It closed at $49 after hitting $72 in the middle of February. I mean, guys, it's like, holy smokes, man. That is insane. And this stock just a couple of months ago over the summer was at $12, $13. It's like, oh my God. Actually, more like 14, 15. Either way, it is insane. So Hims at this point is a pure momentum play. Let's be honest. This is no Palantir. This is no high-flying tech stock. I'm not knocking Hims, right? It's a, whatever, healthcare company. I'm not knocking it, but don't think this is like a Palantir in terms of the move where it's just going to pull back a little bit and then keep on going. This could easily collapse, in my opinion, back to $20, $25 a share. And honestly, it's a pure momentum play. And at this point with earnings tomorrow, man, it's going to be very volatile, no doubt. This could easily come down to $40 a share. Earnings come out, then it goes back to 60. This is the type of stock it is, so be very careful. Earnings per share estimate is 22 cents versus 5 cents from last year on revenue of 470 versus 246 million from last year, up 90% year over year. So Hims, yes, they're growing revenue nicely. EPS is, up a lot from last year, but is that priced in? How much of that is priced in? That is the $1 million question here, guys. And for me, I'm staying away from Hims. I'll be honest. I'm not buying it here. You could make a lot of money. Who knows? But it's kind of risky for me, man. Too risky. It's just way too volatile. This thing makes other stocks look like, like freaking bonds, right? It's insane. So, yeah, Hims, it's cool. If you're in it, kudos to you. But for me, I'm staying away from it, although there could be another big momentum move. Cheers to that, guys. Let me get some coffee. All right, so let's go. We got 3 more. SoundHound AI. Oh, man, this thing has been all over the place. Not looking the best now. We just got a dump a couple of days ago under 1250, which is not good. That was a big multi-week support. Excuse me, guys. And we fell through it. And since that point, well, we've kept trickling down. I'm not surprised. Now we're at $10.30. And it looks like we just took out the lows from earlier last week with the move on Friday. So, yeah, SoundHound, if I had to guess, it's going to be a single-digit stock soon again. That's where we're trending, and I actually predicted that, when it was at 13, 14 bucks. I talked to you guys about it, and here we are. Earnings are on the 27th, so I think that's Thursday. Yeah, after the bell. So we have some days left for SoundHound here, and if Nvidia's earnings might influence SoundHounds. We got news that Nvidia sold out completely of their stake in SoundHound. That caused this drop here. So I don't know. I don't think it's dead in the water necessarily. I don't think it's over for SoundHound, but in the short term, yeah, there might be some more pain before there's gain. For SoundHound, they're projecting earnings per share a loss of 8 cents versus a loss of 6 cents last year on revenue of 33.7 versus 17.15 million. That would be up 96% year over year, but a lot of that, let's be honest, is already priced in. So be careful with SoundHound, guys. I'm not buying it. I'm staying away personally. WBD is another one. Warner Brothers Discovery. They're on, let's see here, guys, Thursday as well in the morning. So WBD, we have a clear inverse head and shoulders here. That's playing out. Momentum's building up. And they're projecting earnings per share of 3 cents versus the loss of 16 cents from last year on revenue of $10.16 billion versus $10.28 billion from last year. That's pretty much down to flat, actually, or flat to down 1.2% year over year. Not too bad. Well, it's pretty bad, but the stock has been reversing, which is good. And if they surprise at all on that revenue number, right, guidance comes in hot, this could probably continue the momentum that we've seen. And it looks pretty bullish still, man. Very bullish at that. We have a golden cross still. We're above both moving averages on WBD. So last but not least here, guys, and by the way, if you stuck till the end, hit the like button, man. I appreciate you guys as always. And don't forget to subscribe. We're on the road to 100K subs here on YouTube, guys. Make sure to hit that subscribe button. I appreciate your support as always. So look, we have Dell Technologies, which has not been doing well at all in the recent months. And quite frankly, over the last year, pretty much, we've been struggling on the stock. We hit $180 back in May of 2024. That was the peak on the 1-year chart. And now, guys, newsflash, it's almost May of 2025. So it's almost a year later, and Dell hasn't done much of anything. But we do kind of have a reversal in the making, arguably, a golden cross here. We do have a breakout above both moving averages over the last couple of days on the 4-hour chart. That's a good sign. So let's see. EPS estimate is $2.52 for Dell versus $2.20 from last year on revenue of $24.6 billion versus $22.32 billion from last year. That would be up 10% year over year. Guys, that's not bad. 10% growth year over year there. But again, is that enough? Will that be enough to actually continue this rally or spark a rally in the first place? I mean, we are up a little bit here, actually a good chunk off the lows. We're up 20% in the last 2 weeks. That's very good for Dell. But will their earnings be enough to get it to really start pushing to the mid-hundreds again? That's the million-dollar question. So what do you guys think? Let me know your thoughts in the comments, guys. Again, run the likes up. Don't forget to subscribe and get your 30 stocks from Moomoo. Guys, the clock's ticking. Use that link down below or go to stocksurfs.com/Moomoo. Once you open up your account, deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, it's a no-brainer, so use that link right down below or go to stasurfs.com/moo. And with that being said, guys, cheers. I'll catch you in the next video.